Welcome, traders, to another Tick Mill trading update with me, Patrick Munnelly. Want to update the gold view. As you all know from last week, we have been playing this from the long side on the breakout from the consolidation, the eventual breakout, the long-awaited breakout, should I say, through that 25.33 handle. I'm using the spot price here for reference. And so now looking at the setup as we head into a pivotal week with respect to the Federal Reserve on deck on Wednesday, and it's really going to decide the near-term fate, I think, with respect to gold. 25 basis point hike would be favourable. A 50 basis point hike could really see some significant inflows into gold as a safe haven, on the basis that markets would probably read the 50 basis point hike as a move more akin to panic than planned. So as we look at the technical setup, we are trading just shy of our initial target zone into the 5610 handle is what I'm looking for. That's a 5 equals 1 objective versus this weekly swing structure that we currently have in place. So looking at this at a slightly more granular level using the 2-hour time frame, I've currently got longs running from 25.26. So what I'm looking for now is another 5-wave sequence to play out here, and I'm looking for a wave for an interim wave. An interim wave 3 high to develop, and then get this wave 4 pullback. And I'm looking for something similar in scope and scale to what we have here as our potential wave 2 pullback. So if we just overlay, you can see how I'm using the measurement here. So I'm looking for a move to test into that 2600 handle, and I'm looking for a pullback then, probably just likely to be in advance of the Fed meeting, as traders cut risk and positions to wait for the outcome of the meeting. So any pullback into the 2570, 2560 area, that's where I'm going to be looking for bullish reversal patterns to increase long exposure. And then we're going to look for our move up into our 2610. We have the weekly R2 coming in 2616. Now from there, I want to pay close attention to momentum, because this could complete an interim 5-wave sequence. And then what I'd be watching for is another pullback to complete a higher degree 5-wave sequence from these lows that we saw into that 2470 before the breakout. So this would be the type of scenario I would anticipate. And then we can look for a retest of the projected trend channel support, coming back in again at that 2560, 2570 level, before once again then looking for another extension. And I would actually target at a minimum the 2630, and then on to the monthly projected range resistance, weekly projected range resistance, at 2640. At this stage, it is really going to take a close back through the breakout level through 2530 to suggest that we've got a false break to the upside, and we are going to see a deeper corrective move. So I'll update this gold view later in the week once we get through the FOMC decision. As always, traders, plan the trade the plan, and most importantly, manage your risk. Until next time, thanks very much.